So today we're going to take a closer look at TSM versus Nvidia. This is a video you, the viewers, voted for, and I do a daily poll to see what my next video should be on, so make sure to check that out. And today we're going to take a closer look at these two semiconductor giants and see which one I prefer. For both, we're going to take a closer look at some of their growth opportunities and obviously some of the risk that come with each investment. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so first let's take a closer look at the growth opportunities for Nvidia. First, we can see with their revenue quarterly trend that the data center market is the biggest player in this company's total revenue segment. And this is a company that has numerous solutions for the data center market. They do have their Nvidia Ampere and Hopper graphics cards that are used to kind of accelerate data centers. And these data center solutions are used to accelerate a lot of the kind of technology we see right now. For example, in the social media, in the streaming world, from Netflix to YouTube, a lot of these big players are using accelerators to improve the recommender systems. We also see these data center solutions being used in things like language models, and we are seeing a lot of that right now with the AI chat that is kind of trending right now. All these solutions need some form of accelerators. Nvidia provides numerous accelerators in this space. The second one is going to be solutions for self-driving cars and autonomous vehicles. Here we can see that Nvidia creates chips that help with the overall process in designing some form of autonomy in either chips, robotics which are being used in things like industrial, which are also being used in things like distribution centers for a lot of these big retail companies. The final solution or growth opportunity is their innovation. A company that continues to innovate, in my opinion, has huge growth opportunities. Obviously, that comes with risk. Nvidia, for example, they are expected to release their Grace Hopper superchip in the upcoming months, early next year, right? And this is going to be a revolutionary product for them. Normally, Nvidia is known for their GPU products. This is going to be the first kind of GPU and CPU product superchip, which I do believe has huge potential in the data center market. And if you want to learn more in depth of these solutions, I did do a video recently of Nvidia's growth opportunities and kind of explain those solutions line by line. So make sure to check out the video. I'll post the link above. But next, let's take a closer look at some of the risks that Nvidia is kind of experiencing or could experience. First, I want to say this is a very competitive market, right? So the competition in this market is strong. We are seeing big players like Intel and AMD are entering the GPU market one way or another, and there are also big players in the CPU market, which is a market Nvidia is trying to enter. So huge competition. There's also competition from companies that aren't even public, but also design some form of accelerators that can definitely kind of hit or take some market share in the future from Nvidia. The next two I want to say are financials and valuations. We can see the company in their most recent quarter, revenue has dropped dramatically the past 2 quarters. Main reason, the consumer market has taken quite a hit, especially with the slowdown in kind of cryptocurrency mining. That has definitely been a huge headwind for Nvidia, and we can see that revenue down. Again, we do have that tailwinds from data centers. We do have that tailwinds from automotive. So we understand the reasons of why the revenue is down, but we also understand why there could be some growth opportunities here. Another thing is, with that revenue down, we are seeing a hit in cash flow from operations quarterly. We can see in the most recent quarter, the company spent more stock-based compensation than they collected cash from operations. So that's something you don't want to see, right? So that's pretty scary for Nvidia in forms of where we're at right now. So that's a big risk. The other risk, this is obviously a growth stock, so it does come at a premium. If we take a closer look at forward PE ratio, it's roughly 55.29. So obviously these are risk, especially that forward PE ratio or premium. That's usually a risk when you have a growth stock like Nvidia. Normally you're not paying at a stock like that at a cheap valuation because these are expected to grow dramatically. At the same time, right, you might be saying, Jose, how can you be paying a premium for this stock when the revenue is down quarterly? This is not a growth stock at the moment. Obviously, right now the consumer market is definitely giving some headwinds for this stock. All right, so before we take a closer look at TSM, make sure to hit the thumbs up if you are enjoying the episode. If you want to support a little bit more, make sure to subscribe. You see my link at fool.com/Jose. Finally, if you are here, it means you are a semiconductor investor. I have a weekly semiconductor podcast. Make sure to check that out. So first, I want to say Trend Force. Great information there. We can see TSMC is by far the market share leader here in the global foundry business, right? They're not competitors to Nvidia. They're in a whole different segment. But in that whole different segment, they are the market share, 56.1% in the most recent quarter, third quarter of 2022. Their second competitor is, or their next competitor is Samsung, which is number 2 in market share. But that one only has 15.5% of the market. So we can see they definitely have a strength in this space, and I believe that alone creates a huge growth opportunity. It allows them to really be a strong player in this market. The second thing is TSM. They do develop small chips, right? And small chips are definitely needed. We can see in their most recent earnings quarterly reports, they do break down where their revenue comes from. A majority of their revenue, over 50%, comes from the smaller chips, 7 nanometer and 5 nanometer. This is a company that continues to develop new chip sizes. The next is the advanced 4 nanometer or advanced 5 nanometer. Then it's going to be the 3 nanometer, and the list goes on and on. Not many players hit that advanced node, and we can see there's definitely a market here. The market from the likes of Apple, as they want smaller chips, Nvidia, and AMD. The second thing is we are seeing more chips being used in normal products. For example, the automotive market. Right now, chips as cars, as they are becoming smarter, as they are kind of being electrified, and not just the electrification, right? Just smarter combustion cars also require more chips, and we are still seeing strong growth in the automotive market for chips. Internet of Things, we are seeing a lot more kind of products. The future of VR, the future of AR, the future of smart homes, smart in the industrial world. More chips are being needed. If more chips are needed, then they're going to be made, and the one who makes them is TSM, right? So we can see a huge market here from smartphones, high performance computing, which is your data centers, the automotive, Internet of Things. And I want to say TSM also has a lot more growth opportunities. First, I want to say this is a more of a value play, right, opposed to Nvidia, which had a little bit more growth opportunities. TSM forward PE ratio sitting at 12.46. Many might consider this very cheap. The second thing is the CHIPS Act. We are seeing a lot more countries kind of develop or want domestic chip manufacturing, so they are giving incentives and kind of providing some form of money, tax relief for companies if they start building or bringing manufacturing to their domestic land. We see it here in the United States. We've seen it in Europe. So that's definitely a growth opportunity for them to kind of increase their overall market share and not spend as much money as they need to. Now, if we take a closer look at the risk, I do want to say TSM obviously comes with risk. First is just these tensions we're seeing between United States and China. Taiwan being a very secluded island there, definitely is surrounded by China and definitely kind of creates, I want to say, fear for those customers that are kind of getting their chips produced by TSM. So one thing right now, a big risk is these tensions. These tensions are kind of making chip customers look for companies that have more of a geographic diversity or diversification. Most of chips from TSM are made in Taiwan. Right now, the company is trying to kind of ease those fears. We can see that Taiwan recently kind of posted that they are going to be spending $40 billion to build 2 plants here in the United States in Arizona. So obviously they're trying to kind of release or kind of relieve the fear for some of their customers. But at the moment, we can see a good portion of their chips are being made in Taiwan, which can definitely be some form of risk if these tensions get a little bit heavier or hotter. The other thing is, this is a very expensive market, right? I mean, we can see capital expenditure in trailing 12 months for TSM was $33 billion. That's insane. And it's just going to continue to get expensive as the company continues to innovate in next generation of nodes. 2 nanometers is going to be expensive. They're going to continue to invest in that. And as they continue to also expand into new regions, we can definitely see them probably increase those capital expenditures as the years go on. So now let's take a closer look at the pick. Which one would I pick? So I want to say both of these have different reasons to purchase. I'm personally more of a growth style investor, right? I enjoy that growth stock. So for me, I enjoy Nvidia. I believe there's huge tailwinds into data center, artificial intelligence, automotive. Their products that they're hitting with their great super chip and all the software solutions. So I personally would go with Nvidia. That doesn't mean, in my opinion, that TSM is a bad pick. I understand why some would go for TSM. TSM is definitely more of a value play. It definitely has a nice dividend at hand as well. And we also see the backings of Warren Buffett and Berkshire Hathaways. So there's definitely a reason to pick either or. I think if one is a little bit less risk adverse or just wants a little bit less fear, TSM might be that play. Personally, if I was to purchase TSM, I think I might just go instead with the Semiconductor ETF. But I can definitely see why TSM could be a pick for some. For me, I enjoy that growth story, so I prefer Nvidia. So I hope you guys enjoyed today's episode. Let me know in the comments if you enjoyed this quick setup, and if you want me to make more videos like this.